Welcome to the Invest Tony channel. On this channel, I share with you my knowledge, my experience, and my mistakes so you can avoid making them and make your own. Alright, so this is the second video in my little series of videos on trading and technical analysis. And if you haven't watched the first one, the introductory lesson, I highly advise you to do so because that video is more general, but it helps you to put your mind in the proper settings, so to say, so you can manage your expectations, because technical analysis is not a crystal ball, is not a way to predict the future. It's just a tool which helps you to get an edge, and I explained this in details in my first introductory video. Today there will be more of a hands-on approach. We will be talking about how to analyze the charts. I'll explain what are candles, how to read candles, what's the price action, how to read the price action. And I'm sure that now to you, most of you, technical analysis looks like this, and I hope that in the end of this video it will start to make a little more sense. We will talk about different indicators briefly in general, why people use them and which ones we're gonna be learning, and we'll see how it goes. I'll probably do a few more videos going a little more in details. Today will be just the basics, but those basics are essential. You cannot go further and learn more difficult stuff if you don't know the basics. So let's go ahead and begin. So first of all, we'll need the internet site, which is called tradingview.com. Looks like that, and I will show you around. So I highly recommend you sign in, create at least free account. You probably won't need a professional one until you really decide that you want to trade professionally, and then in that case a few dollars of a subscription fee will not matter, but at least create a free one, so whenever you log in you have your basic list of the stocks or commodities or crypto stuff you trade. Yes, friendly reminder for you, my friends, if you learn the technical analysis, you will be able to apply it to any asset class or any crypto or any equities, anything at all. Whatever has the chart can be analyzed from a technical analysis perspective. And a lot of traders use technical analysis more than they use news or even fundamental occasions, because they can be misinterpreted. The same news in one's eyes can be positive and one's eye can be negative, and maybe in my second or third video I'll show you how news which seem positive can be reflected negatively on the chart, and negative news can be reflected positively on the chart. So famous billionaire Bernard Baruch said that show me the chart and I'll tell you the news. So we will be specifically looking at the charts, and we'll be learning how to analyze and read the charts. So first of all, when you go to TradingView, you get to the point where you click show the full chart, and then you can create you can add the crypto or stocks, futures, whatever you want, just by typing here. We will go BTC and then USD, let's say on a Bitstamp, or I already have a Bitfinex. Bitfinex is the longest existing chart which you can analyze Bitcoin at. So we'll just click plus here. I already have it, so I'll just click on the little aim thing and it will show me the chart of Bitcoin. Now here on top we have different time frames. M stands for minutes in this case, so it's 5 minutes, 15 minutes, 30 minutes, 1 hour, and you can add whatever you want. I recommend you to begin with at least have 1 hour, 2 hours, 4 hours, 1 day, and maybe a week, and if you want you can also have a month. You don't really need 5, 15 and 30 minutes, maybe 30 minutes just to get an idea, but we won't use them right now, and why I will explain in a minute. Now these are different time frames. What do they stand for? So if we go to a weekly, same as it is set up for me right now, that would mean that every single candle represents a week. So those red and green columns you see here in the chart, they are called candles, just like the candle you would lit up. And same as that other candle, it has a wick, W-I-C-K, a wick, yeah, and the wicks can be to the upside and to a downside. As you see, the candles are can be red and green. So how do you read them? So the candle has its opening, its closing, its highest and the lowest point. So if we look at this green candle, for example, it opened in the left bottom corner right here, and it closed in the top right corner right here. So during the week the price fluctuated between, so this week the price opened at $43,200 and it closed at $48,195. Also during this week at some point the price went as low as $40,561 and as high as $49,196, and those highs and lows are represented by the week. And also if you just hover around the candle here up top, you will see the OHLC, that's opening, high, low and close. If it's a red candle, then it means that the price opened at a higher point than it's closed, and in this case it would be a top left corner and the candle closed at bottom right corner. So during this week price opened at 47, went all the way down to 39 and then closed at 43. So the week was over. Since we're talking about Bitcoin is traded 24/7, same as all crypto. So the week begins with Monday and close on Sunday. If we're talking about equities, then equities clearly are not being traded during the weekend. They are only traded since the morning of Monday till the evening, or rather afternoon, on Friday. So in that case the candle will open on Monday and close on Friday. So now, at least looking at the chart, you would know that the green candles means that the price goes up, and you know when the price is opening and when what's the closing price, and how high the price went and how low the price went during this period of time. Now let's say you see this long candle to downside. We don't know how long let's say the price spent below 49,000 or precisely at 44. We don't know how long the price was there. Was it just for 1 minute, or was it for a few days that the price were below the closure? We cannot tell that. But to go to see this inside, we can switch to a lower time frame, and then that was a week of 20. Let me see once again. That was the week of 29th of November. So we go and we see November. There you go, December 29th. Yeah, so that was this week. So we see exactly that it was just 1 day when the price went all the way down to 41 and then bounced back. So if it would have spent more time here, probably the candle would have closed differently. But why I'm showing you the different time frames, just so you learn that you can and should combine different time frames in your analysis. And always you should begin with the longer time frames and then go down to smaller time frames. Now it's also important to realize on which time frames you are looking to trade. Are you gonna trade intraday, meaning open a position in the morning and close in the evening? You're gonna do like a small term or mid-term swing trades, in and out in a week, in and out in a month, or it's going to be more of a long-term range, or even you can use even a chart as a tool which helps you pick the right time to invest. Because if you don't look at the chart and you just look at Bitcoin and you don't know if 20,000 is a good price, it's going to 17, is it going at 25, you have no idea why we spend so much time at 20,000. But when you open the chart, it all start to make sense. So depending on the time frame you're looking to be in a trade, you can use different time frames in your analysis. But regardless, even if you go to trade even intraday, you know, like very short period of time, you still need to take into consideration long-term trends and long-term levels, because they will affect any smaller time frame, right? So always, when you open a new chart or even old chart, when you begin your analysis, always start with a longer time frame and then go down to smaller time frames. Also, remember, since this is a beginner's video, everyone probably who's about to enter the trading, thinking that I will do the intraday trading, smaller time frames, I need to do my few percentages real quickly. You probably already pulled up your spreadsheet, did a little bit of paper math, and you see, oh, if I only could make a 3% a day or 1% a day, you know, I'll be a millionaire real quick. Yeah, well, that does not work like that, you know. Just trust me, trading is a difficult skill, and it's a difficult job. You won't be able to post consistent profits, like, you know, just compounding 1% a day. It's not going to work like that. So I would recommend a newbie, somebody who's just entering the trading, try to trade on a longer time horizons, on the longer time frames, because when you go to 5-minute charts, it always looks like the world is about to collapse. You see this one on this chart looks like it's just going down to abyss, or this one looks like it's just skyrocketing to the moon, even though the prices just changed between 19,000 and 20,000, but it looks like we're just, you know, about to crash our monitor and just skyrocket to the moon, you know, and then this one falls. So it's very difficult emotionally to trade on a small time frames. It requires a lot of skill in analysis, and also a lot of skill in a discipline. And my first introductory video was all about discipline and the mindset. So it's trust me, trading is hard enough. Don't put additional difficulties to yourself. Learn to trade on a daily basis. You know, Bitcoin and crypto, and that's probably why you're here, are volatile enough. You can trade them on daily and still make a lot of profits, but it will be, you know, probably more profitable to you, because you just will be able to manage your trading strategies. But about the position, you know, positional sizing and trading strategies, we will talk probably closer to the end of this course. Right now, let's focus on reading the charts. So you open up a monthly candles, and you start to look at the history. Of course, you can start charting from the very beginning of the time, but back in the days, Bitcoin was trading at $100 to $1,000, and it wasn't really a sophisticated market. So we can start analyzing probably since the previous peak, which happened to be December 2017, and very simple strategy which I will show you today. It's based on support and resistance. You have to identify them on the chart, and you can get an edge just by trading supports and resistances. And one of my favorite trader, the guy who's definitely outperforming the majority of traders, he goes by Don Alt. He has a YouTube channel and he has a podcast, and his charts look like this. Pretty simple and easy. He has the zones, which look like that, and he has the lines, the supports and the resistances, and it's just as simple as that, right? If this zone doesn't hold, then it's probably going to get here. If this doesn't hold, then it gets here. And that's enough for him, and he, again, shows very good results. So kudos to him. I am more of his type analyst, because I think that that's enough of the edge. You know, you always want to make sure that the chances are in your favor. You don't need them to be as precise as possible. Having said that, there is another type of a trader, you know, famous Eric Crown from Crypto Cave. His trading desk look like this. He has all sorts of possible indicators, and you barely can see the price, and it's all about some sort of you know, indicators and other stuff which kind of shows him where to get in, where to get out, what's the probabilities of the price going up and down. It's all about getting the probability of where the price should go in the next period of time. Depends on which one you're analyzing. And again, maybe his chances are better. Using few additional indicators, he can slightly increase his chances. But you can all learn this stuff on later on, maybe some other YouTube channel. If you want to go deep, there are limitless amount of courses and YouTube videos which explain you how to use the very sophisticated tools. But if you can learn to trade at least the basic stuff, you will already have an edge. It will be enough for you to be profitable consistently if you are following whatever you draw on your chart. Because as I said in my introductory video, it's one thing to draw a line and another thing to respect the line. All right, so I'll just briefly show you how to draw supports and resistance so you can play with it on your own time, and then the second lesson will begin with repeating this material, and we'll go further to trend lines and things like that. All right, so these are the tools of a trading view. The main tool would be probably trend line. It's just a line. You can draw it like that, and you can adjust the thickness of it, adjust the color, and you can always delete it with delete button. You can also go here and you can find a horizontal ray, horizontal line. We usually will use the horizontal ray. And for horizontal ray, you just click somewhere, just pick a dot, and it will make the ray, right? So the most important levels on the charts are tops and bottoms of any given period of time. So it's clear that here in 2017, the very top, according to the Bitfinex chart, was at 19,890, and we can just click here and it will draw a ray for us. And lo and behold, that's exactly where the price is right now. So for somebody who's not looking at the chart and never seen the chart of Bitcoin, just heard the price, maybe it's surprising that it fell from 69 and it basically consolidated for a little bit at some point. We'll talk about why it was this area where the Bitcoin consolidated and now it's falling. Why did it stop at 20? Why didn't it go to 15? Why didn't it stop at 25? Well, for us, those who are looking at the charts, we know that 20,000 or 19,891 is the important area. Also, we can go ahead and find the bottom of 2018 exactly here, January 2019 and December 2018. The price were about 3,500, or to be precise 4,400. So we can use this area, or we can even use the very low of the week, about 3,100. So that was the ultimate low. And you can see when we had this liquidity crisis and the price just dropped here from 9,000 to 39,000, we almost hit that area. Why we stopped here, I'll show you later. There's also a reason why this week stopped, but that will be the case for the next class, because it has something to do with the trend lines. Now we have two main areas here on the chart, and maybe not to confuse, let's put this one in green since this one is a little above, and now this level is a support for us. Why it's support? Because it is supporting our price. If we fall and we stop on a line which we draw previously, that line is considered a support since it's supporting our price. Now if Bitcoin were to fall below this level and start to bounce and hit this line from below, that line will likely be a resistance. It will not let Bitcoin go higher. It will resist to its growth. Now let's draw another line. Clearly we can see another high which we cannot disregard. It was in June 2019, and that was around 13,764. We just draw another line here, and we can expect if Bitcoin drops from the current level, it will probably try to touch this level of 13,700. Why? Because it's another significant level on the chart. And by the way, just a little side note. First of all, we can get rid of the volume because it's not the theme of our class right now. But look at the opening and the closing of the candle. The candle of December 2017 closed at the level of 13,769, and of course the next candle opened at the same level. And if we just draw it on the opening and the closing, we will see that that's exactly the same level at the top of July 2019, when the price hit this level and got rejected and went below. So here you can see how this price level acted as a resistance. The price tried to breach it from below and it didn't quite work for it, and the price fell down. So the lesson from here: the wick, the top of the wick and the bottom of the wick are important levels. Also, the opening and the closing of the candles are important as well. Here we can see if we had this chart. So here we can see if we had this line since December 2017, that would give us an idea where to exit our position and where to take profits. And it exactly hit it in 2 years almost later, 1.5 years, in June 2019. So now the recent history, we have the previous high of Bitcoin in April 2021 at around 64,829, and we can draw a line here. And of course the second important level would be the all-time high at around 69,000 as well. I would draw a line of the opening and the closing of the candle 69, and the closing and the opening of the previous candles at 58. But it's getting a little messy, a little bit too quick. We see that there is this line, there is this line, and this line, by the way, has some importance here. It didn't let the price bounce. You can see that, right? So we draw this line just based on the opening and the closing of the candle, and we can already see that once the price fell below it and it tried to breach it from below, this line was providing a resistance and it didn't let the price go above. So instead of drawing this line and this line, since they are located so close to each other, we can combine them in a zone. And now that's another tool. You see the little brush here. You can click on the brush and you can pick a rectangular. So we combine basically both of these lines, and we can also include maybe these two levels, since they look promising too. You see this candle is basically completely inside the zone. This is completely inside the zone. So we're covering the opening and the closing of this candle, and that correlates almost exactly with this candle, and it correlates exactly with this candle, of course, since one candle is attached to another. So to clear the things up, we will get rid of those two levels since they're part of our zone. We can extend the zone to the future a little bit, and we probably should change the color to red since it's now currently sitting above our price, and that's a resistance for us. So next time when Bitcoin will go up, we should be looking at the area between 57,000 and 61,600. It will probably show some resistance on the way up. When Bitcoin will hit this area here, we will probably see something like that. It will go up and it won't make it from the first attempt. It will probably go up another time, and maybe it won't make it even since second attempt, and then the third time it will probably break. It will be fun to watch it in the future, and you write me in the comments if you're watching it in the future. You tell me if my forecast actually worked out. I believe that it won't break since the first attempt, likely since the third attempt. So okay, I will be wrapping up. It's enough for you to begin with. Yeah, I'll just add a few more levels. So you can see for yourself. We can also add this level, of course, the closing of all the candles here, and it's funny, but you will see this level is also very important, where this candle closed, and you can see that it had 1, 2, 3 touches during the summer of 2021. It touched it in May 2022, and once it broke down and closed below it, it went to the downside. So we don't have to combine them in the zone. They are a little far one from another, so I'll just leave them at that. Maybe to be a little more inclusive, we will do something like that. If this zone makes more sense, you don't have to be precise, right? That's not the geometry. This is technical analysis. So you just draw whatever makes more sense. To me, this zone makes more sense than just a line. I like to include this kind of narrow candles, because usually there is a reason why this candle opened here and why it's closed here. So you can see that that area was supporting the price when it fell down in January, then it helped the bounce in February, it precisely bounced off in March, and once this candle in May closed below it, it went down below. So arguably this area is very, very important. And again, let me do a forecast for you. Once the price of Bitcoin will bounce from this level or from a level below, it will struggle to break this area. Again, maybe 1 or 2 or even 3 attempts. Once it gets above, it will touch it from above, and it would be critical for Bitcoin to hold this area. If it will be able to hold this area, then upside is more likely. So there's a saying, you need to flip resistance into support, and that's exactly how it looks like, meaning that this area will be resistance, and once we flip it and the price goes above, we'll have to touch it from above, retest it, and flip it into a support, and from there it will be supporting us again. So with this knowledge, I will let you to it. You can go ahead and draw supports and resistances on any chart you want. You can go on gold, you can see the supports and resistances here. You don't know yet about the trend lines, I'll show it to you next time. But the funny part is that supports and resistance, they work on every single chart. I'm showing you random charts which I like to play with. That was the gold, this is Dow Jones, this is Ethereum. You can see how the support and resistance play here too, and if you move them, adjust them a little bit better with the weeks, then you can see that that's exactly where it's supporting, that's exactly where it's resisting. And you can play with some altcoins, you can play even with a dollar index, anything you want. With yen, let's see how yen is performing. Yep, you see once this area is broken off, it goes down. And if this area right now, which we have here, it looks like it's broken, and you can see it's retesting it from below, so probably yen has further way down, and the next resistance would be at 68.31. I'm just showing that it works on every single asset, and you can pick whatever you want, you can play with it, you can draw the lines. And well, if you like this type of content, hit subscribe button, hit a like button, hit a bell notification, make sure it's on so you don't miss my next videos. Thank you very much for your attention. Don't take more risk than you can afford. Thank you. See you. Bye.